Welcome back, folks, to another exciting episode of Q in Charge. I'm your host, Joe the Q, and today we're diving into some recent developments in the automotive industry, particularly surrounding Toyota's unexpected strategy shift. Now, you might have heard the headlines about Toyota cutting its 2023 EV sales forecast by nearly 40%. It's a move that has raised a lot of eyebrows and questions about their direction. So let's break it down. So what is the latest Toyota strategy shift in this world and why sudden shifts? Okay. What's the deal with Toyota, you might ask? Well, despite an overall positive outlook for the company, Toyota is significantly reducing its electric vehicle sales forecast for 2023. They initially expected to sell around 202,000 EVs, but they've now revised that down to just 123,000. That's almost a 40% reduction in their EV expectations. This has left many industry experts and enthusiasts scratching their heads. Now, you might be wondering why this sudden shift in strategy. Toyota's CFO, Yoichi Miyazaki, mentioned that it's a response to the intensifying EV price war in China. To compete with companies like BYD and Tesla, Toyota had already cut prices in the region and even laid off workers. But let's dig a bit deeper into this. According to recent data from the China Association of Automobile Manufacturers, the Chinese EV market is indeed witnessing intense competition. Local EV manufacturers have been aggressively pricing their electric vehicles to gain market share. In 2022, China was the largest EV market in the world with over 4 million EVs sold. This represents a significant opportunity for automakers like Toyota, but it also means they must navigate a fiercely competitive landscape. Here's your first question, folks. If Toyota is lowering its EV forecast due to the intensifying price war in China, how is it planned to stay competitive in other major auto markets like Europe and the US, where EV sales are on the rise? Well, the answer is not that simple, but if we can say it or structure the simple answer, it is next. Recent reports suggest that Europe and the US are also experiencing rapid growth in EV sales. In Europe, countries like Norway have already achieved significant market share for EVs, with more than 50% of new cars being electric. Yeah, several European countries have announced plans to phase out internal combustion engine vehicles in the coming decade. In the US, the Biden administration's commitment to electric vehicles and the growth of charging infrastructure are driving increased EV adoption. Automakers are investing heavily in electric models, and the competition is expected to intensify further. So the question remains, how will Toyota respond to this global trend while reducing its EV sales forecast? The decision to lean into hybrids might provide some short-term stability, but it's important to consider the long-term implications in a world where electrification is becoming the norm. Now, we are getting somewhere.
Yeah.
Toyota's embrace of hybrids. How about the future? So what's Toyota's plan then? You might wonder, well, rather than going all in on EVs, they're doubling down on their heritage of hybrid electric vehicles. Hybrids currently make up about 28% of Toyota's global sales, and despite the reduction in their EV sales forecast, Toyota expects to sell even more hybrid electric vehicles in the coming year. But let's explore this strategy further. Hybrids have been Toyota's strong suit for years, and they have a proven track record of delivering fuel efficiency. However, the question arises, with the world moving towards full electrification, is Toyota's emphasis on HEVs a sustainable strategy in the long run, or is this just a temporary measure to avoid the current EV competition? Recent data from the International Energy Agency shows that the global stock of electric passenger cars reached over 10 million in 2021, a 40% increase compared to the previous year. This growth reflects a growing commitment worldwide to reduce carbon emissions and transition to cleaner transportation. Many governments are implementing stringent emission regulations and offering incentives to promote electric vehicle adoption. Countries in the European Union, for example, have set ambitious targets for reducing CO2 emissions from vehicles, and automakers are under increasing pressure to meet these targets. In the United States, several states have announced plans to phase out the sale of new gasoline-powered cars in the coming decades. As a result, we can expect a significant shift towards electric vehicles in the American market. So when Toyota places its bets on HEVs, it raises questions about whether they're aligning with the global trend toward full electrification. While HEVs are a stepping stone towards reducing emissions, they may not be the ultimate solution in a world that's increasingly electrifying its transportation sector. As our listeners contemplate Toyota's strategy, they're left to wonder whether it's a well-calculated move or a temporary measure that might leave Toyota playing catch-up in the evolving automotive landscape. Toyota decided suddenly on broader industry trends and shifted toward a new strategy. Now, it's not just Toyota making these adjustments. Ford and GM have also made similar moves, delaying their EV investments and productions. It's a bit of a trend we're seeing in the automotive industry. But as I've argued before, are these moves short-sighted? The EV market is experiencing fluctuations, but the overall trend is towards increasing adoption year over year. But let's go deeper into this trend and the potential consequences. And this leads us to the next question of the day. Are these automakers missing out on the long-term potential of the EV market by making short-term adjustments, or are they making the right moves to ensure their financial stability in the face of evolving competition? Recent data from the International Energy Agency suggests that the global electric vehicle stock exceeded 10 million in 2021. This represents a significant milestone in the transition to cleaner and more sustainable transportation. Governments, particularly in Europe, are setting ambitious targets to phase out internal combustion engine vehicles in the coming decades. Additionally, new technologies and innovations in the EV sector are rapidly expanding. Battery technology is advancing, leading to longer ranges and faster charging times. Solid-state batteries, which have been considered a potential game changer, are on the horizon. These advancements are driving increased consumer confidence in electric vehicles. Consumer preferences are shifting too. More people are valuing the environmental benefits of electric cars and the lower operating costs they offer. As a result, automakers are responding by ramping up their electric vehicle offerings. So the big question here is whether automakers like Toyota, Ford, and GM are making prudent moves by delaying their EV investments. While they may be protecting their bottom line in the short term, they might miss out on the long-term potential of the rapidly growing EV market. The challenge for these companies is to balance the need for financial stability in the present with the necessity to stay competitive in the future, where electric vehicles are set to dominate the automotive landscape. But keep in mind that there are currently some automakers in financial struggles due to the fast shift and expansion into EV industry and automating. So who knows, maybe Toyota is a smart play. But let us go on with our topic. This time we have some listener comments and remarks on the topic of the day, as we had some discussions with some of the followers and shared some of this vision on this. So here it is. All right, let's get into some comments and remarks from our listeners. It's always great to hear what you all think about these industry developments. Jenna said, this is what happens when a company does not want to make EVs, and when they finally do, it's not up to par with the competition. Jenna, you've made an excellent point, and it's a sentiment shared by many. When established automaker like Toyota hesitates to dive into the electric vehicle market, it can indeed result in a struggle to catch up with the competition. As we've discussed today, Toyota's recent strategy shift to focus on hybrids while reducing its EV sales forecast is a notable example. While Toyota has a strong legacy of producing high-quality vehicles, the EV landscape is rapidly evolving and consumer expectations are changing. The key challenge for Toyota and other companies in a similar position is to adapt to this shift in the industry and align their offerings with the changing demands of consumers in global markets. The decision to invest in and promote electric vehicles is not merely about developing a new product. It involves a transformation of an entire company's culture, supply chains, and manufacturing processes. It's a complex process that can't be rushed without careful planning. However, as our conversation today has highlighted, the risk is that waiting too long to embrace EVs can result in a competitive disadvantage. To succeed in this new era of transportation, companies like Toyota must not only catch up, but also lead with innovative, high-quality EVs that meet the evolving expectations of consumers. Time will tell whether Toyota's strategy will position them as a leader in the EV market, or whether they will face continued challenges in catching up with the competition. One thing's for sure, the automotive industry is in the midst of a significant transformation, and the decisions being made now will shape the future of mobility. David from LA comments next, those investing now will reap the benefits as electric vehicles continue gaining market share. I believe that Toyota is behind and needs to catch up in the race. I do understand they're conservatives on expanding, but it may cost them gravely. Thank you, David, for Sharing your thoughts, your comment resonates with many industry experts and enthusiasts who are closely watching Toyota's recent moves. The sentiment that those investing now will reap the benefits as electric vehicles continue gaining market share is indeed prevalent. As we discussed earlier, Toyota's conservative approach, while understandable in the short term, raises concerns about potential long-term consequences. The rapidly growing market for electric vehicles, both globally and in major regions like Europe and the US, presents a significant opportunity. Being perceived as behind in the race could have implications for their market position. It's a delicate balancing act for Toyota and other automakers to navigate this evolving landscape. They must ensure their financial stability while staying competitive in a world where electrification is becoming the norm. How Toyota adapts to this challenge will be closely watched, and your insights, David, mirror the ongoing discussions within the industry. As we move forward, it will be fascinating to see how Toyota and other automotive giants position themselves in the ever-changing world of electric vehicles. Thank you for your contribution to the conversation. From Pennsylvania, John said, if Toyota is lowering its EV forecast now because of the intensifying price war in China, how does it plan to keep up when other major auto markets like Europe and the US see EV sales accelerate? China is the world's largest EV market, giving us a preview of what will likely happen globally. Buyers are looking for the latest tech and software, not outdated gas-powered hybrid models. John, you've brought up a critical point that reflects the global nature of the electric vehicle market and Toyota's strategy. While China indeed serves as a bellwether for the industry, the rapid growth of EV sales in Europe and the United States cannot be ignored. As we've discussed in this episode, Toyota's decision to scale back its EV forecast and lean into hybrids might help them navigate the intense competition in China in the short term. However, the evolving landscape and changing consumer preferences mean they may face challenges in other markets. Buyers worldwide are increasingly looking for cutting-edge technology and software in their electric vehicles. This not only includes longer range and faster charging, but also features like advanced driver assistance systems, connected services, and sustainable materials. It remains to be seen how Toyota plans to adapt to these different market dynamics. Their commitment to making electric vehicles account for 100% of global Lexus brand sales by 2035 is a step in the right direction, but how they bridge the gap between their current hybrid heavy portfolio and this ambitious target is a question that only time will answer. John, thank you for your insightful comment. It's evident that Toyota's strategy is being closely watched, and it's a topic we'll continue to monitor in future episodes. Stay tuned for more updates on the evolving world of electric vehicles and their impact on the automotive industry. Let's take a closer look at 3 more listener comments and consider some additional insights. Comment by Maria from LA reflects the skepticism many have about companies that were slow to embrace electric vehicles. The concern here is that when these companies do enter the EV market, they may struggle to compete with the more established players who have been investing heavily in EV technology. It raises questions about whether Toyota's recent pivot is too little, too late. Then here we go, one from Utah. Sheldon says, highlights a prevailing sentiment among investors and industry observers. Many believe that the companies that invest in electric vehicles early will have a significant advantage as electric vehicles continue to gain market share. The question then becomes, will Toyota and others who are making delayed investments in EVs be able to catch up? Thank you, Sheldon. Your comment echoes a prevalent sentiment. Early investment in EVs offers a competitive edge. The race is on, and companies like Toyota, while experienced, must adapt swiftly to secure their place in the EV market. The EV landscape is dynamic, and it's about innovation, not just speed. Toyota's strategy shift raises questions about its long-term competitiveness, but it's not too late for latecomers to embrace the electric future. Keep those comments and questions coming, folks. Your insights shape the conversation on Q in Charge. Last comment for today, I promise. This is coming from let me find it. This is coming from Chicago, a windy city that raises a vital point about the global nature of the electric vehicle market. While China is currently the largest EV market, other major markets like Europe and the United States are rapidly catching up. Toyota's strategy shift, driven in part by the situation in China, may not fully address how they plan to compete in these other regions. This prompts us to consider whether their current approach aligns with the trends in these markets and consumer preferences. As we can see, listener comments offer a valuable perspective on the complex decisions automakers like Toyota are making in response to the evolving automotive landscape. It's clear that these developments are not just limited to the boardrooms of these companies, but have real implications for consumers, investors, and the broader industry. These comments truly highlight the concerns and opinions of our listeners. It's clear that the automotive industry is at a pivotal moment, and how these companies navigate the EV landscape will have a significant impact on their future success. And there you have it, folks. Another insightful episode of Q in Charge. We've explored Toyota's surprising strategy shift and the questions it raises for the entire industry. As always, stay tuned for more in-depth discussions on the latest trends and developments. If you have any comments or questions, feel free to share them, and who knows, your thoughts might just make it to the next episode. Thanks for tuning in, and remember, I'm Joe the Q, and I'm in charge. If you have any thoughts, questions, or topics you'd like us to cover in future episodes, don't hesitate to reach out on our social media channels or through our email. Your feedback is invaluable to us. Until next time, remember to stay informed, stay curious, and stay engaged. I'm Joe the Q, signing off, and we'll catch you in the next episode. And do not forget to like us, share us, and subscribe to us for more. Take care.